The Reserve Bank of India on Friday cut the repo rate by 25 basis points to 5.15%, which is the lowest in 9 years. The commentary also indicated that more rate cuts could be in the offing. Let's do a three-point analysis to find out which stocks are good bets for investors in a falling rate scenario. 1. Dividend-paying stocks. Well, government's 10-year bond yield slipped before recovering on October 4th after the Reserve Bank of India slashed the key rates. Now, anecdotal evidence also suggests that dividend-paying stocks performed relatively better in a falling rate scenario. Now, observation of rolling of 1-year returns indicates that the bulk of outperformance of Nifty Dividend Opportunities 50 Index was during the FY10 to financial year 12 period, when the real yields remain persistently negative. ICICI Securities believes that interest rates globally are headed lower along with improving liquidity, and hence real bond yields could dip further as the RBI is also expected to cut rates incrementally while inflation rises closer to 4% mark. Now, falling bond yields are an indication that interest rates are heading lower in the economy, which implies that the cost of borrowing is also expected to move down. Now, such a scenario is good for equity as an asset class, as lower interest rates are beneficial to spur consumption in the economy, suggest experts. 2. Which sectors or stocks are likely to give dividends? Well, ICICI Securities also points out that the corporate tax rate cut from 35 to 25% recently will also improve the dividend payout profile of India Inc. immediately, as capital allocation decisions on new investment may happen with a lag as demand environment still remains quite bleak. On the other hand, Ajit Mishra, Vice President of Research at Religare Broking, has also told Moneycontrol that capital-intensive sectors such as metals, oil and gas and power can avail the new capital at a much lower interest rate now. He also says that not only dividend yield stocks but overall equity as an asset class also tends to benefit from the falling bond yields. Now, we also spoke to Mustafa Nazim, who is the CEO of Epic Research, who says that during times like these, where we have seen a shrink in the GDP growth and economic activity, dividend stocks will continue to perform due to their stable income generation characteristic for investors. 3. Which dividend stocks must investors look at then? Well, experts suggest that while selecting high dividend-paying stocks, investors must ensure that they are paying attention to the other fundamental factors as well, such as the sales and profit growth of the company, EPS, and debt versus equity as well. ICICI Securities bets on stocks like ONGC, BPCL, Coal India, Hero MotoCorp, NMDC, Power Grid, also Infosys. While Epic Research has TCS, HUL, ITC, HPCL, and also IOC in the list of stocks that can be kept on the radar for dividends, as they have consistency and a good track record as well.